Right, hello and welcome to Camel Finance. I'm your boy Camel and welcome to the week. Welcome to Monday. I want to start things off by pointing at something pertaining to the banks, okay? First of all, we know this BTFP, which is the QE disguised as a loan program. This is plugging the holes in the bank's balance sheets via this QE in disguise, right? They print money and they give it to them and say, yeah, use that to plug the holes in the banks. But why is this so important? It's important for two reasons. Number one, this is set to expire in March. Now, as I've said a bunch of times, we could certainly see them kick the can down the road. There's nothing to say we get to March and they don't say, well, we'll just extend BTFP by another 6 or 12 months. You know, they have a big habit of doing that, right? Just keep kicking the can down the road. So maybe that happens. But if it doesn't, then suddenly these banks are going to come under a lot of stress. And another way of thinking of this is that a silent bank run is accelerating in the US once again. Remember, we've seen accelerative periods before, and now we're starting to see this again. Now, why is this a potential issue? Because last time we had this, remember, we had a bunch of banks really suffer, with a few of them actually going completely broke. Now, last time this happened, it was very, very bullish for Bitcoin. Bitcoin did Bitcoin things. But the point I'm trying to make here is if this continues, particularly into March, and then suddenly they pull the BTFP at the end of March, then, you know, these banks, this could certainly manifest as another banking crisis, perhaps a lot worse than the last one. I'm a little bit cynical here, but I often think when I see this, that this speaks a little bit to a controlled demolition because they want to usher in these CBDCs, right? So maybe I'm overly cynical, one day at a time as always, but the closer we get to March, the more we have to focus on this, especially because, as well, the reverse repo is being drained at a rate that will run out before we even get to March. So liquidity is currently present, right? It's currently there. We could certainly see higher prices in the near term. But the question remains, once that reverse repo liquidity is drained completely, and once we get a month later, roughly into March, when this BTFP is set to expire, you know, our time's going to get pretty rough. And of course, all of this with potentially seeing rate cuts show up. Now, the jury's still out on whether we're going to get the rate cuts in March or in May, as I was showing over the weekend's video. But something else I've been very, very consistent in saying is that I don't really think they're going to end up cutting rates voluntarily because we've got inflation under control. As I've been saying over and over again, I think they're much more likely to cut rates as a result of being forced to because the adults in the room have had to break something to force the Fed to react. So it's going to be really interesting. It's going to be something I'm going to continue to cover. I've been covering this on and off for a while, but as we get closer and closer to March, you know, this is really important because think about what they really did, right? They told the banks to buy a bunch of bonds and promised them they wouldn't raise rates. Then they raised rates more aggressively than we've ever seen in any other time in human history, just a few weeks later, right? In doing so, it forces all of those bonds that those banks had bought to go into unrealized losses. And the only reason that those losses weren't showing was because they weren't marking them to market, right? This would be, of course, the equivalent of me saying, well, I bought Bitcoin at 30K, Bitcoin drops to 15K, meaning I'm on a 50% unrealized loss. And then I just say, no. I'm not going to count that. I'm not going to put that on my balance sheet. We'll just pretend like Bitcoin is still trading at 30K. That's the only reason that their balance sheet is holding up as well as it is, because they're just not actually marking the bond losses in a way that reflects their true value, okay? So this is quite severe, and again, we could easily get to March and they could kick the can down the road, no problem. But if they don't kick the can down the road, okay, things could well become quite ugly quite quickly. So the last thing I'll say on this doomsayers type introduction, probably not the kind of thing you needed to hear first thing Monday morning, is all eyes on this as we move towards March. This kind of event, this kind of unpredictable event is apparently baked into the charts. The members have already seen this already. It comes out for everyone else on Wednesday, so make sure you come back and see that. Other than that, I didn't mean to start your Monday off with such doom and gloom, but, you know, it is what it is. So on a slightly brighter side here, the Golden Bull has signaled for only 7 times in history, and it's just flashed of late. Now, what this means is with a 100% forward 12-month positivity rate, we can expect to see a green finish to the next 12 months. If, however, we don't get one of these, it will be the first time in history that this thing has broken. Bitcoin still remains hope. Bitcoin still remains the apex predator asset, and there is no second best, right? Bitcoin, over the last 12 months, is up 85%. Meanwhile, when we take a look at the rest of these commodities, you know, we got 20% for coffee and sugar, gold sitting at 5%, and everything else, poor performance. And notice how everything listed here, right, from here down, all of these are negative. Now, does that or does that not sound like we're about to see another round of inflation? Are the commodities front-running more printing? Or does this speak much more to that inflation-deflation pendulum swinging towards deflation? Something to keep in mind. In terms of the ETFs, the inflows and outflows are starting to look a lot more encouraging at the moment. The ETFs has taken in $1.1 billion more than GBTC has lost in the last 6 days of trading. So we've had 3.9 billion in inflows from 9 ETFs and the outflows from GBTC around $2.8 billion. So happy days, right? We're moving in the right direction. Of course, the GBTC outflows cannot continue forever. And then the question remains, once we get rid of this selling from GBTC, does the price start to do what people expected it to do on launch day? More encouraging signs here because the ETPs, the exchange traded products globally, now hold just under 1 million Bitcoin, which of course is 5% of the circulating supply. And 5 years ago, there was only 159k Bitcoin in ETPs globally. So there is massive demand. As this asset class matures, we should continue to see massive inflows as everyone around the world starts to get a part of their allocation globally. We're also in this neighborhood where we're starting to see divergence between whales and retail. So retail is exhausted in terms of buying and are now in aggressive distribution. Meanwhile, whales are accumulating. This is the smart money. The smart money is accumulating here whilst everyone else doom posts on Twitter, sells their bags, and is targeting much lower numbers or a retest of the lows just like we did in every other cycle. Notice most of all, the 10k Bitcoin whales have drastically reduced distribution. So at some point, we are going to get an aggressive price reversal, and that reversal is likely going to be to the upside. Who do you think's right here, the whales or the retail? Not to mention, we've got even more charts. These charts just continue to be more and more bullish. I can't really find a bearish chart out there anywhere. The only thing we ever hear in terms of bearishness is that we're into a fib retracement, right? Okay, well, that doesn't mean that that comes next, does it necessarily? And the other thing I keep hearing is, well, we're in Wyckoff distribution. But, you know, on a monthly chart, where's the distribution? Okay, so let's take it one day at a time as always. The thing I like about this is log money flow index, and you can see down the bottom, this is approaching euphoria. Now, last time this happened here in red, you can see very good things happen to the price of Bitcoin. Same here, right? Very good things happen to the price of Bitcoin. And back here, very good things happened to the price of Bitcoin. So will this be different this time around? I highly doubt it. And I've been saying this very, very consistently. Not to mention, Bitcoin's trend score is the second strongest in CME futures history. Tells me at least to keep an open mind about better than expected outcomes, an even stronger trend. And of course, with even stronger trends comes even higher prices. Again, as always, I'm open to being proven wrong if we lose support here, if we had to start to break down somewhere in here, or most importantly, print a failed cycle, which would take out this current range low. Then, of course, I'm open to seeing downside to here in the best case scenario, and we'll start to entertain moves down towards the lows. But until such times as these conditions are met, then it's pretty reasonable, for me at least, to expect higher numbers and a parabolic blow off top to develop. So with all that said, it still seems like Bitcoin, no changes, right? We still haven't taken out the low, we're still trading in this range, and we're still working our way towards this cycle low. Now, it's worth pointing this out. We're not that far away from this expected cycle low. So a perfect day 60 cycle low would be around the 9th of February, 9th or the 10th, and that's only 19 sessions away, but we can lop 6 off of this because there is a 10% tolerance, meaning we could see this cycle low inside the timing window around as early as the 4th of February. Of course, it could come 6 days later as well, but the closer we get to this expected timing window for the cycle low, the more likely it is that we're actually not going to do what everyone thinks we're going to do and have some massive plunge, right? The closer we get to this, the more confident that we can be that any sell-off, if it is to occur, is a buyable swing, right? So if we are somewhere in this neighborhood and then we get some kind of crash, people that don't have cycles as context are going to become very, very nervous, bearish. They're going to be like, oh wow, we traded in this range and now we've lost support. It was indeed distribution and we have to go all the way down here and multi-months of downtrend. But they're all going to be wrong because the closer we get to this cycle low, the more confidence we can have in saying that any sell-off is going to V out of here and then continue on to his next 60-day cycle. So if you're bearish, if you're wanting a much lower price, you really need to see us take out this prior cycle from back here ASAP, because we're running out of sessions left in this 60-day cycle to even see further downside. Like I said a minute ago, the more time we hold this range, then the more likely it is any sell-off becomes a V and rockets higher. So what else is there to say, really? Not a great deal, because we covered it all in the weekend's video, of course. The Dixie, you know, this is still my hope. It's still my hope that we haven't got a 3-year cycle low yet and that we'll get one more rollover. But as it stands right now, it is working on confirming that, get above this horizontal, and we will have to accept that this is likely the 3-year cycle low for the DXY. Gold, I'm still thinking about lining up a short, but I want to see this thing move higher one last time if possible. Otherwise, the plan will be to just sit on the sides and exit a bunch of risk assets into gold down here if this move starts to play out prematurely. And for oil, you know, I'm still getting a lot of people saying, is this breakout for oil? Yeah, look, maybe. But as I keep saying over and over again, don't pay attention to the news, pay attention to the chart. If I went long here, would I be super confident that what comes next is a massive breakout? No. You know, this thing appears to be waddling sideways. It appears to be compressing, and it could really go either way at this moment, right? We could break out from here, or we could break down below here. So we'll see, right? One day at a time. But for now, I remain short. The stop is choked up, and we'll see what can happen from there. Other than that, there's one other thing I wanted to point out, and that is the divergence here from the stock market. So if we look at the S&P, right, fresh highs, bullish as a son of a gun. NASDAQ, same deal, right, bullish as a son of a gun, above all-time highs. And the Dow Jones, look, still moving higher, right, bullish as a son of a gun. But the Russell 2K, the small caps, still not broken out of this range, right? We had the breakout, failed, and now there is divergence. Whilst we've got the stock market, the S&P 500 and the Dow, like I said, moving higher, we've got the small caps moving lower. So there's two ways to interpret this. One is there's divergence here, and that the stock market is possibly in some kind of bull trap mode and is set to roll over. Or two, that small caps are about to break out and catch up significantly. So there's a long way to go here. But if we continue to be held down by this red resistance line, right, if we continue to trade like this for the Russell 2K, then that is actually quite bearish for the stock market. That's actually something we saw mark the top back here. Right, back here for the stock market, we had the S&P, the NASDAQ and the Dow doing this, whilst the Russell 2K was making a lower high. So it's something that we need to keep an eye on. My base case, of course, is still that we haven't been proven wrong yet. This looks really bullish, and thus I kind of expect breadth to continue to widen. I kind of expect to see, rather than this yellow squiggle play out, for the Russell 2K to actually break out and start sending. So if that's the case, then happy days, long and strong. No real cause for concern at this moment in time. But like I said, if we get to the end of the week and rather than break out of here strongly like this, instead what we've done is reject a resistance and start to move lower, then like I said, the lower high, right here, lower high rejection is something we saw last time at the top. Whilst the S&P 500 was making higher highs like this, right? We saw the Russell 2K make a lower high and move lower. So something to keep in mind, right? We don't want to see that again. We want to see this thing break out. If it can break out, then we can put our feet up on the desk and go fishing for a couple of weeks, I would think. As ever, one day at a time, and let's see what the market can give. But for now, like I say, I do want to see this Russell 2K break out. I don't want to see this yellow squiggle come to fruition. So with all that said, I will love you and leave you. For the members, you know, long and strong, continue to push, and patience as we get towards that 60-day cycle low for Bitcoin, and then all of those miners we can look at getting long. For everyone else, welcome to the week, welcome to Monday. I hope you're doing well in life, and until next time, take care from me. All the best. Cheers. Bye.